Hey there, it's Jessica, and I'm here with Beta Virtual Assistant. So, basics of crypto taxes. Let's do it. Number one, what is crypto taxes? Actually, I was watching a webinar earlier today put on by Mark Kohler. He's actually getting ready to run a crypto tax summit again. He hasn't run it for 2 years, but he's doing one in next month. And so he was doing like a prep webinar for it, pushing go buy tickets to the crypto tax summit, which was really interesting last time. And I learned a lot about how crypto taxes work and that I was on the right track and advising our clients and all that sort of thing. But I did catch some bits today which were very interesting. He was talking about if you want to avoid taxes, you want to set up your entities in related to like your Roth IRA, for instance, here in the United States. We've got a retirement account called Roth IRA, which once you've put money in there, you pay taxes on the money that you're going to put in there, but then after that, you never pay taxes again, which is kind of interesting. But he made the point that if you want to do, like, say, Bitcoin mining in your Roth IRA, well, it's all very nice that you want to, but if you can only put, like, I guess the limit is $7,000 this year, if you can only put in $7,000, you're not going to get very far. But what he has done somehow, and I need to figure out more of this, is he's taken his Roth IRA, but also created some kind of limited liability company, I think, that runs Bitcoin miners using the funds from his family's IRAs. So his kids' IRA's money all goes into it. And if you've got, like, I think he was using the example of like 5 people, so, you know, mom, dad, 2 kids, $7,000 each going into a Roth IRA, and all of a sudden you've got $35,000, and that's a lot more. You know, you can actually do something with that. You can actually purchase the equipment that you might want to run a Bitcoin mining pool or whatever it is. And I don't know all the details how he was doing it, but that was really interesting. Is like because I always thought like your IRA, you have to build enough in there. That was really frustrating when I first got started with investing. Is like, oh boy, at the time, I mean, the limit on the IRA was like $2,000 a year. And it's like, what can you do with $2,000? You can't do anything. And nowadays, I have this course that I've learned how to trade options so that you're earning 1% a week. So now I would do that. Possibly, yeah, possibly. But, and then figuring out the crypto investing and figuring out how to make money with the crypto investing. And, my other guru I follow put out a money management system this week and talking about how when things are going well, you increase your bets, and then when the market turns against you, you take off all that risk and you start back at not really zero, but less. And then if the market's still going against you, you move back from that, which is an interesting way to handle risk. In any case, okay. So basics of crypto taxes that everyone should know is, number one, most governments expect you to pay money into the system to pay for, I mean, they always say it's for things like fire departments and health services if you're in one of those countries, or, you know, having properly working streetlights or whatever, and which sounds very cool. And then you read the people who are against government taxation, and it's more like, well, they're really spending it on wars and administration, and you're like, well, okay. In any case, it can't be my job to figure out how the government is spending the money, because if that were my job, I would be working for the government, but I am not. I am working for myself, and I don't have time to figure out the government's problems. But what I do is figure out how I can do my fair share. So I don't want to pay more than I have to, and I don't want the government coming after me because I didn't pay or because I tried to evade. So if you think about, like, for instance, most famous gangster in America, Al Capone, terrible mafia boss, had so many people killed and did cause so much mayhem and all these problems. But he didn't get in trouble for any of that. He got in trouble because he was evading his taxes. That's what they could get to stick to him. That's what they managed to throw him in jail for. And then you think about Martha Stewart. and how she got thrown into jail because of tax evasion. So it's like, I don't know if it's only if you're like a really high profile case that they can be like, aha, you have money. But if somebody figures out that, oh gosh, I mean, Mark was talking this morning about this guy who put $5,000 into a Roth IRA, ended up with $7 million. Can you imagine turning $5,000 into $7 million? And the reason he told that story is because the kid didn't know any better and had to actually pay taxes on the $7 million. And like, just unbelievable. And then he was talking about another client of his that they work with who has a Roth IRA set up correctly and is now worth $200 million, which is amazing because you can only put $5,000 to $7,000 a year into a Roth IRA, and to have it turn into 200 million is just like, wow. I mean, that's amazing. And to have that completely tax-free, unless the government gets really mad and changes all the rules, completely tax-free. You don't have to worry about reporting it. You don't have to worry about tracking it. The only reason you would want to track it is if you want to make sure it's doing what it's supposed to, kind of thing, which I think I talked about in last week's Facebook Live. But yeah, fascinating stuff. So anyways, all governments want a piece of our funds and of our production because they need money to do what they do. So they want a piece of it. They've got these forms that they want you to fill out every year. And a lot of governments will actually make sure that they collect money from you by keeping part of your paycheck. So most businesses are required to ask you for a tax form here in the United States especially, and then they withhold money. And then at the end of the year, if they withheld too much or not enough, they expect you to figure it out, and they expect you to pay more if you didn't pay enough. And if you overpaid, they'll give it back, but you have to fill out their form and you have to play their game. So the game of taxes is getting it done right so that you're not overpaying, you're meeting your obligations, and you don't get in trouble, right? So that is what we help people figure out, is how to report crypto taxes. And crypto taxes figure into it because everything else, you know, your wage earnings is usually reported by your employer to the government. Your brokerage earnings is usually reported by the broker to the government. So you need to gather all of that information in and fill out their form correctly so that you can get your refund or pay extra or whatever. But crypto taxes is still so new that most people don't know how to do it. And so what they hope for is that they can get a crypto tax software like Koinly, for instance, and connect their data, import their data, and push a button, and they're done with their taxes, right? I mean, it's that simple. But what they don't realize is that when there's not a human person looking at that data, they don't realize that there's all these things that can go wrong. There's, if you're moving money around and you moved money from one place to another place, but it comes into the second place having no cost basis, then you're paying 100% capital gains when you sell that. So for instance, I use this as my famous example. So say you bought Bitcoin at $30,000, or I think I used $60,000. Okay, so say you bought a Bitcoin today for $60,000. Market crashes. You send it to a different exchange, and when it's worth $30,000 and you're disgusted with the whole thing, so you sell the Bitcoin. Now you know that you bought it for $60,000 and then you sold it for $30,000, and that means it's a $30,000 loss. And losses in most countries offset your gains 1-to-1. So you really want to record those losses, even though they may be embarrassing to you. You may not want to like admit that you had a loss like that. But if you have a $30,000 loss, that's going to come in really handy if your Bitcoin that you still have is going to go to 7 million. I know 30,000 won't make much of a difference on a $7 million tax bill, but you do. I think the guy, yeah, he was talking about this guy and had an account worth 7 million, but he only got to keep about 3.5 million after taxes, which is so sad because he didn't set things up right, and he didn't plan ahead. He didn't there's ways to lessen the impact of that, but in any case, so which is what we help people with, just figuring out all the intricacies of like, when do I sell my stuff, how do I sell it, and making sure that the story is getting told correctly in your tax software so that you don't have this Bitcoin that you moved and sold at a $30,000 loss, but that exchange reports it as it had no cost basis, so it's a $30,000 gain. Very big difference between a $30,000 loss and a $30,000 gain in terms of your taxes. And the other basic thing that you need to know about taxes is that there's two things that you need to report, especially here in the United States, but pretty much world over. We've got anything you sell. So if you sell Bitcoin, if you sell a crypto, if you convert from one crypto to another, if you use your crypto and as part of your crypto, like you have a credit card connected to your crypto, and every time you use your credit card, you're selling a little bit of crypto to pay your credit card purchase. Um, all of those need to be reported on your taxes. And that's where you want to be figuring out, was it a gain? Do you have a cost basis and you sold it for more than you bought it, or is it a loss? You sold it for less than you bought it, and you get to write that off and offset other gains. And then the other thing you need to report is anything you received. And he was talking specifically about this because I always wonder about this, like when you get cash back from your credit card, or if you get a reward for opening a Coinbase account, or if you're out there staking and mining, of course that would be income. If you're out there with a job that's paying wages, or you're running a business like we are and people pay us in crypto sometimes, all of that is income. But he did speak specifically to like credit card rewards, because somebody said they got a reward for opening using Cash App, and later come along and there's like, they didn't report it back then because they didn't know any better, and now what do? Like, do they like go back and file taxes from previous? And he ended up saying that at that point, if you sell the crypto and you count it as zero cost basis, then you're going to take care of two problems with one stone, basically, which is you didn't report it as income before. Well, now you've sold it with zero cost basis, so that kind of takes care of that. But in other terms, you have reported that you received the crypto, which you hadn't reported before. So that gets you in the good side of things, and very good. But he did go through this whole thing about, people getting cash back from credit cards is great, but they do send you a 1099 at the end of the year. I guess I haven't gotten one of those yet, but it's like, yeah. So I have been telling clients that they need to report this stuff, and turns out I'm right. Okay, so if we have two things we need to report all of our capital events, which is sales, mostly sales, and then we need to report all of the crypto we received that we didn't purchase. Or gifts are kind of a gray area. You don't really report a crypto that you're given as income in most cases. It usually relates to your cost basis is transferred from the person who gave it to you, which means you need to figure out what their cost basis was, which then if you don't, then it really does become income to you, I think. But in any case, so that's all complicated stuff. Basics of taxes. Number one, I think you need to report to stay on the right side of your government and to keep your government happy. But at the same time, my goal in life is to help you report the right amount and not too much, and to help you find strategies like the one he was talking about with this guy who had a $7 million gain. If he had taken that $7 million coin and not immediately sold it, but first placed it in a charitable remainder trust, which is some kind of fancy trust, he could have lived off of the money. Eventually, the proceeds would have gone to a charity, which is helping his community, and he would never have paid any tax on it, which is like, wow. I mean, yeah, that sounds good to me. In any case, so if you have questions about tax strategies, what you can do to make your taxes easier, how to file, the way we help clients file is we do use one particular tax software. It's called CoinTracking. You can add your blockchain addresses while you're at the free level. After that, you do need to pay for a yearly subscription, but with our link, you can save 10% on that. Or you can come, if you are bot trading and you have hundreds of thousands of trades, you're gonna need the unlimited, and then you can come work with us, and we either include it as part of our service packages, or you can get a 25% discount on the software if you buy it through us. But in any case, you use the software because the software automatically imports all of the data. Then you've got to figure out, is the data telling the right story? So that's where we teach our clients through our do-it-yourself package or our premium services, where we do it for you. We teach you how to recognize if it's telling the right data, where the mistakes are. We were working on a client this morning, and she had one coin in her account that came in called USDC, and it said she was in Australia, so it said her account was negative $30 trillion, which is like, yeah, if you report that on your taxes that you have an account worth 30 trillion negative, like it doesn't even make sense. But this is the sort of thing we help people figure out, is where the junk coins are. If you've been spammed with junk coins, and how to identify them, what to do about them if you need to do anything. We teach people how to make sure that their cost basis doesn't get lost, how to track your DeFi protocols correctly, how to track your loans correctly. We help take care of all of that stuff. So if you haven't figured any of that out, if it all sounds scary, now you might be the kind of person who is just starting out. You just have bought a little bit of Bitcoin and you haven't actually sold anything yet. That person doesn't need to report taxes yet. You only need to report if you've received crypto or if you have disposed of crypto. So that's something to keep in mind. And then once you get started, working with someone like us helps you get it telling the right story and working for you. Especially coming through the bear market we just went through the last couple of years. It's so important to report your losses, and people don't realize that. But in the meantime, if you have any questions about crypto investing, crypto taxes, we do have a group now, Safer Crypto Investing, where we are trying to build a community where people can ask questions and get answers that aren't somebody trying to sell you something. So we're trying to keep spammers out. People who are trying to post things like, join our crypto casino, yeah, they get kicked out. So we want it to be a safe place for people to ask questions and to learn together. And if that sounds good to you, check it out. But yeah, that's all I think I have for today. But in the meantime, if you have questions about crypto investing, about crypto taxes, or investing in general, we love to talk about this stuff. Send us your questions in Messenger, or write us an email, or join our Facebook group and ask away. And in the meantime, have a great week, and we'll see you another time.
And that brings us to the end of today's video. I hope you found something valuable or interesting in what we discussed, and if you did, be sure to hit that like button and subscribe for more content like this. Let me know in the comments what you'd like to see next, and until then, stay curious.